Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 26th of September, 2019. We're just after 4 p.m. Central Daylight Time. I'm reading comments late in the day from the Chinese ministry where they're saying if the U.S. would just blah, 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 they could probably make some progress. Well, the simple fact is, the big question is, at what steps do we make some progress? We know that pork and beans, and I'm not saying that to be funny, pork and soybeans are what the Chinese are interested in right now, and I'm hoping that what the Trump administration does is take steps at a time to a cumulative end of a deal rather than trying to get all this done at once. I think that when the president said yesterday that we're closer to a Chinese deal than not, that could be what he's alluding to, but do I know what's in his mind? Nah, there's no chance you do. For a day like today, it was pretty much a quiet day as the markets were all taken back with the hearing about the whistleblower and listening to what was going on with that. Of course, the impeachment proceedings are going, and we've got to be very careful. Nancy Pelosi did mention that I don't know that she's brought it up to a committee to bring to the floor of the House of Representatives, but they are looking at the USMCA deal. I don't see her giving the Trump administration any wins while they've just launched impeachment against the president, an inquiry, so we'll see what goes on. But as you can see here, you are a mixed bag in the energy markets, the stock market down, and not so bad when you think about it, given all the noise that we're getting with everything. So for the week, at least going into Friday, we are up 5 3/4 cents. The market still has this whole area of resistance we have talked about. We're getting fairly late in the season. This is September 26th. So sooner rather than later, we're going to hear about cold weather coming in from Canada up north. I'm hearing in the Dakotas it might be coming through already. Some snow in Canada. Whether it makes this far south, you don't know. What are we doing? We've been going sideways in this market and sort of just stuck in a pattern here. Now, temporarily, the swing line has got a pattern of higher lows, and if we look at this, lower highs. Should the market break out through 885 1/4, and that's on the downside, what do we have? Well, let's go to the next chart and we get a feel. If you were to take this out, and by the way, notice where this market has stopped. See that 100-day average? We talked about that. When the market was going up, it paid absolutely no attention to the 100, and then it came back and it just started paying real attention to it. Should you take out that 885 1/4, the next support zone becomes 882. If the market can take out 899 1/4, I'd look to see where the Bollinger Band is, and that's up at 910 through this resistance of the 904, 906 area. So that could be interesting. I think that now we look at momentum and we see we're overbought. Overbought momentum like this, I wish I could say always, but more times than not, it results in the market trying to slip back. I admit we're trying to hold this average right here, but if you take out this yesterday's low, which was specifically 885 1/4, what takes place is you'll have lower highs and then a lower low setting up for this challenge, and if you come down, you could start what we call that break in the harvest. Hard to know. And I don't even know where we're harvesting yet. And that's because of the lateness. Now, one of the things you and I just talked about in the market is this market came up to the upper Bollinger Band, and that was on Tuesday. I made a statement. I said, if this is true to form, it's going nowhere because you're caught in this sideways action. We backed off a little yesterday, and as you can see, that back off continues. Are we trending? No. We're caught in this massive sideways action. It really began at the beginning of August, and you've gone nowhere except churn back and forth. And I would say meal traders have been getting themselves, those that are looking for a move haven't been able to catch it. In soy oil, with today's action, you have higher lows and higher highs. The market finished off at 29.17 under the 18-day average of closes. So even though the swing line's up, the bias is down. Should this market take out 28.97, it puts into play the 100-day average. Why am I looking to the downside? Because that would change this whole pattern. And since the market's not over the 18-day average with the bias down and momentum pointing down, I wonder if the market's trying to tell us a story that it wants to take that out and maybe head down to that number. The risk for those that would go short as the market breaks there would be over today's high of 29.33, about a 40-point risk, and then the support around 28.63, and that's if the market trends. When I say risk, that's just in a perfect world with no stoppage, no overnight events or anything. But as a chartist, that's what you look at, and then if that gave ground, you're looking at the 18-day average. To get the market friendly, close over that 18-day average, and at least you get the market with the bias up. I still will not like the fact that momentum's pointing down. That's divergence. In the corn market, I've been telling you how frustrating this market is as well, and it's there. You can see it. You're not strong enough to get to an upper Bollinger Band. You haven't hit a lower one in a long time. You're out of a trend. You have a lower low, higher high. And if you look at the slow stochastics, both numbers today on the close are over 80. Both were over 80 yesterday, and both were over 80 the day before. So we have an embedded reading. If you lose the embedded reading, the odds favor the 18-day average. I would not be surprised if that's what happens. This market's just ugly. It's not moving one way or the other. In the wheat market, from the upper Bollinger Band right back to the line in the sand, that 18-day average, momentum overbought, not in a trend. This grain picture is just not looking like a good picture. Bullish or bearish, just sort of a churn. In the sugar market, you're getting overbought. You've now got a couple of days over the upper Bollinger Band. The odds favor that the market's going to pull back a little bit into that band. Let's assume I'm wrong and the market just wants to keep going up. It's overbought. It can't embed under this. So somewhere between right where it's at and the 100-day average is the next level of resistance. It just wouldn't surprise me on a Friday as the markets come up like this that the market wants to back off a bit. In the coffee market, this is a market I think we've been able to reasonably talk about, and it's doing what we said. Yesterday, the market had that big reversal negating the downside. Now, if the market goes up, where do you see the first resistance? I would look for the 100-day averages first, and if you can get through it, maybe you get to the upper Bollinger Band. You went right to the 100-day average, you stopped. Are you in a trend? No. You have a lower low and a higher high. You're certainly in an upthrust. If the market wanted to blast through there, then the 105 area, the upper Bollinger Band's the resistance. I'd still look for support at 99.77, but this end of the market, this correction ended in it because the sells or the failures were happening higher and coming down. It's hard to be short over that 18-day average of closes. In the cocoa market, as long as you maintain this embedded reading, this market still has punch to the upside. And the theory of this is until it's lost on the pullbacks, the pros are buying it, looking to see if they can get back to the Bollinger Band. In the cotton market, we're at a very important number. I think that if you take out 59.63, given that momentum's already pointing down, that would then give you a pattern of lower highs, lower lows under the 18-day average, putting the possibility of getting in to the 57.50 area. Conversely, you still have the market in an uptrend right here. You still have the pattern of higher lows and higher highs. The bulls are going to try to support, in my opinion, the market at 60.18, but I think if it gets under 59.63, they throw in the towel. So I've given you both sides of the story. In the cattle market, an embedded reading, market coming up, but we know that meat's in short supply around the world as China keeps buying up all over the regions. And I'm not talking America, I'm talking outside of America, as they've had this African swine fever. I keep reading stories about it as to how severe it is, and they're asking right now if the hog farmers in China will go out in the larger ones and restock, and they're saying no. I need a vaccine. I'm not going to put my money, that's what they're saying, into this, and then we get this disease and I got to take everything down. I'll go broke, and that is the problem that people are facing. Higher lows, higher highs, resistance between here and the 100-day average, rather formidable, and on breaks I would expect to see continued good buying in this market. Feeder cattle, same thing as the fat. The 100-day average would not be a surprise that that's the support, not back down here. The fact that you went right up through it looks like some of those other markets I showed you, that when you don't pay attention like soybeans did and they went through it and then they pulled back, this becomes a support zone. I'll be surprised that that's not the case, but the trend is up, momentum is locked in, this market's still bullish, as is the hog market, fighting now at the 100-day average. That's 2 days in a row. Unlike the cattle, it's not embedded. This is an overbought market in a resistance spot, and the question is, can it pick up and out of here? We haven't tested this 100-day average. If you look, since back at the beginning of August when we got under it, we never came back to visit. This is our first retest of that important moving average. I talk about this, and we talk about a lot more first thing in the morning, because first thing I do when I wake up, I'm always second guessing myself, and I'm sure you are. I don't lose confidence in my analysis. I get pissed because you'll hear something and you go, oh, does that change your thinking? The hardest thing to be is discipline, and that's the key. So I start you off with a cup of coffee. If you're with me, I'd give you that cup of coffee. And we're going to review 40 charts on the futures markets, typically 3 to 5 on the ETFs. We're going to go through the fundamentals in the morning. So because I do this, I'm up at about 4:35 in the morning, and I've read everything I need by 5:30. Therefore, how my day goes, I start by 6, I'm recording. So that gives me all the time I need to read. I'm going to be talking to you about Asia, Europe, what's to be expected in the U.S., key reports that are coming out, if something happened overnight, getting your day going. And believe me, I'm not bashful. In this particular video, I'm able to say, I want you to buy here. This is where the stop is. This is what I think. The most important thing I do in this isn't telling you what to get into. It's keeping you away from problems. That's my opinion of it. And that's what I try to do, and I explain that in the morning. Anybody can go out and buy or sell, but what about money management, dollar risk, and so on and so forth? What about not realizing there's some key report and you walk into it and you go, what the heck happened? Well, that's what this is about. And I record in this exact sequence each and every time. On the bottom of the video, and it'll look like this, it'll have a black background. I obviously am not in it at that hour. I'm not in my studios. You're able to have a bar that you pull, and it's going to light up, and it's going to say meat markets, grain markets, softs, wherever you want to drop it. You need not watch the whole video. That's the key. The video is going to be about 20 minutes long each morning. You don't need to look what you don't want to trade. So some people never want to be in the energy markets. I get it. Some people never want to trade coffee, cocoa, whatever. That's fine. But you'll read something maybe at night and you say, what is Ira thinking about that market? The cost, if it's not inconsequential, I don't know what you're watching this for. The first 30 days, 26.5 cents a day at $7.95. After that, you can either go, and you can do it at any point. You can go to a 30-day subscription, but that's after your introductory, or you can go to a 1 year, and you'll see on our new website, and it's up and all working, you can choose 1 year. That's the equivalent of $13 a month. Now think about it. If you're trading corn, a penny in corn is $50. You've covered how much of this? So that's my point. A minimum tick in corn is $12.50. It's more than that. I can go on with the meats, but you're getting the point. It's not meant to be expensive, but it's supposed to give you a lot of information, and that's what we do. Go to our website, www.iraepstein.com, and if you look at it, you'll see the word research. Under it, you'll see morning subscriber video. Go right there. You can click here if you want. That'll take you there as well. In the meantime, I'm Ira Epstein. I'll talk to you tomorrow. Have a good day.